Hi, I'm Adam,
This is Kevin.
and we are Tech Guys Who Invest. This is the place for business people and investors to learn all about investing. We offer a fresh perspective on what it's like to have a day job while investing, and we share lessons learned on our investing journey. Our vision is to educate and entertain you while adding tons of value to your daily commute. Welcome to our show.
What's going on, everybody? Welcome back to another episode of Tech Guys Who Invest podcast. Adam and I before we were recording, we were talking about this awesome thing that Adam is doing with his daughter that we think might actually be adding value to his home, but I'm not sure. Adam, do you want to talk about the project?
Yeah, I'm not sure about adding value to the home, but it's going to add value to our household because we are going to get fresh eggs on a regular basis. We're building a chicken coop in our backyard, and we're going to buy hens this weekend, actually.
Nice. That's awesome.
Yeah.
Fresh eggs. Omelets
Yeah.
at the Yories.
Oh, man, cannot wait. And it's bigger than I thought it was going to be. And yeah, it's a lot more work. I really feel like at this point, if I had it to do over again, I would buy one of those kits.
You picked the
We built
perfect
it from
time
scratch, man.
in the Florida summer to build an outdoor project, I think.
It felt so great out there, 90-degree heat, humidity to make it feel like it's 100, swinging a hammer.
Who needs a gym when you can build a chicken coop?
Exactly. Nice. So, Kevin, we were talking about the topic of 401ks.
Yeah, we definitely were. And I had a 401k in the past with a previous employer. You currently have a 401k.
Right.
We've learned about other investment vehicles like self-directed IRAs and EQRPs. So we wanted to give our listeners a different perspective of looking at a 401k. And we'll dive into what we're talking about in the episode.
Yeah, absolutely. We've got some personal experiences we'll share, and then experiences with them through people that we know or are connected to. And one thing we kind of like to start off with is how the 401k admins actually want you to keep your money in the plan, and how the system itself is really designed to get your money into the plan and keep it there, not only through the administrators and the companies that sponsor the plans, but through I'm going to say the public finance industry.
Absolutely. Yeah, there's such a, if you think about what you're marketed to from a financial perspective, you have financial advisory groups, you have hedge funds, they're multi-billion-dollar companies. So it would behoove them to market the way that they do. And because their certain funds are certain SEC filings, they can do the marketing to non-accredited investors or even to accredited investors. There are certain filings. I'm not an SEC attorney, but from my understanding, they have that ability to. And 401k is no different, where your company has it and it does seem like a good benefit. Generally speaking, I do think it can be helpful for a couple of reasons. One is discipline. If you want to invest, there is a level of discipline you should have. Because even if you're a passive investor, you should do your own research, whether it's research on the individual, whether it's research on the asset class. You need to know where your money is going into. And that's what we always try to preach. If you were to invest with Joe Schmo, or if you were to invest in this fund or invest with us, do your research. And the 401k is no different. While they give you a limited number of different funds, look at those funds. Do the research on the people that are investing your money. Another thing is saving it or automatically putting it away, maximizing it. I am not a CPA, so take this with a grain of salt. It might be in your to your advantage to maximize your 401k for like tax purposes. And if that's for your particular use case, you're building that discipline to say, you know what, I'm going to maximize this amount of money so that it can grow. The same thing is true if you were trying to buy your own investment property. You need to save up some money to use it as a down payment, right? If you're going to do an FHA, you could save up that money to then use that as a small 3.5% or whatever it may be down payment to use the FHA loan. So there's some characteristics that you can establish with the 401k that I think don't really get talked about.
Yeah, and I think those are a couple of good positives you mentioned there, Kevin. And I'd like to touch on a couple of reasons why I'm not a huge fan of them, and then maybe we can come back and talk about using some of those positives to our advantage when we find out that our money's trapped and we can't get it out, which we both have personal experience with. A couple of the I would say disadvantages or things that I just don't like about them. One is a lack of control. You really have just a few designated options to pick from, and a money manager, a fund manager controls your money. And you have very little say in it other than just to pick from a few different fund options. So I don't like that at all. I don't like, and this is somewhat related to control, how once you put your money in, it's very difficult to get it out. Uh,
Yes.
you're not able to just take it out. You don't have checkbook control over it, which means you can't take the money and deploy it or invest it the way you want. If you educate yourself and decide to do something different with it, that is, it can be very difficult to get your money out of there. So those are a few things that I don't really like about it. One more huge one is hidden fees related to the whole industry, being designed around this. These things are designed to make the ultra wealthy hedge fund managers and fund managers extremely wealthy.
Right.
And that's what they're really designed for. For the longest time, I didn't quite understand that. I heard it a few times and thought, it sounds like a conspiracy theory. But after doing my homework, I have discovered it is true. And part of what they do is charge these fees. They're intentionally hidden, but they structure it in a way where it's legal to do it the way they're doing it. They will also collaborate with companies, and the companies don't even quite fully understand in most cases what's happening there, but they'll work with companies to incent them to motivate their employees to contribute to the 401k. The companies get big incentives to do that. And then now they're part of the problem of getting more people trapped in the 401ks.
Yeah, I agree with you 100% on everything that you said, the hidden fees. And to piggyback on that, I don't know any of you who have tried to call your 401k custodian and try to get in touch at the level of, hey, I want to speak to the fund manager. It's not enjoyable. It
You should do it.
sucks. You should try it. Yeah, it's your money, your hard earned money. You should have a little bit of an opinion as to what gets done with it, right? Maybe just educate yourself more, build a relationship with the person that's managing it. You want that ability to do so. But if you can do that, let us know. We'd love to hear about your experience, maybe bring you on the show. But from my personal experience, it sucks trying to get in touch with the people in charge of your 401k.
Yeah, and if you've ever tried to discover the fees that are associated with it, it's impossible. I mean, you can come up with some of the fees that they disclose, but then others are just impossible to dig into and find. So those are some things I don't really like. But what we talked about earlier that I'd like to come back to is what to do if your money is trapped there. And you want to know what are some strategies I could look to
Well,
here. What could I use?
when you say trapped, Adam, what do you mean by trapped? Let's I want to break that down for our listeners.
Sure, that's a good one. I think what I'm talking about there is you can't just pull that money out and invest it in a way that you see fit. So I couldn't go get the money from my 401k, my current 401k. I cannot just roll that into a self-directed option or a qualified plan and invest it. They will not let me have
Yeah.
that money.
And my personal experience, when I built up around like 70K over my first 5 years at a company. So I was pretty diligent and disciplined about throwing money into it. And when I was planning to use that as a down payment, because you can take 50% of the value of your 401k as a loan up to $50,000 and use that as a down payment. So that's what I was thinking when I first started investing in real estate. But what had left that for my first employer, I called the 401k, said, hey, this is my plan. How do I do this? And they said, unfortunately, because you left, it's stuck there. You either have to withdraw it, the entire amount, roll it over to a self-directed IRA, or you just take it out, withdraw it from the entire 401k vehicle and take the early withdrawal and the tax implications. So all my hard-earned money wasn't really my money in the 401k, which was extremely frustrating. Because if I was to roll it over in the self-directed IRA, which I did, if I wanted to use that as a down payment, I could only take up to $10,000. Well, $10,000 versus $50,000 are two very different amounts, right? So it was an extremely frustrating but eye-opening experience when it came to the idea of 401ks.
Interesting. Kevin, why could you only take 10,000 out of that once it was rolled into the self-directed IRA?
My understanding is from my research, that's just the max for IRAs that you could take an effective loan out was $10,000.
Okay.
As a down
But
payment.
you could deploy the full 50 into an investment from the self-directed though, right? Just couldn't take a loan against it.
Yes, exactly.
Okay.
I didn't clarify that. Yes, I could have taken that
Gotcha.
70K, which I rolled into the self-directed. I could invest that in anything I want, excluding life insurance or collectibles. And if I wanted to take a loan out to use as a down payment, it was only 10K.
Okay, gotcha. So we talked about that the money's there, and let's say you can't get a hold of it. What can you do? I think what Kevin mentioned earlier is a good strategy to, while it's in there, uh, embrace the discipline of the saving, right? So you can apply that to other areas of your life, especially with saving outside of that type of vehicle for investing. So embrace the discipline piece. And then another thing that Kevin and I were talking about before we started recording was use the time to educate yourself and make a plan for how you can invest the money when you are able to get it out. Because, like Kevin said, when you leave the job, you're able to roll that money into a self directed IRA. Use the time to educate yourself and get really educated on what you would like to invest in so that when you do roll it into a self-directed IRA, you're ready to go. You can invest from the self-directed IRA.
Yeah, an exercise you could do would be let's look at your 401k account and say, if I was to take all this money and just put it in my lap right now, what would I do with it? If you're not sure, then start educating yourself at some capacity. And it doesn't really matter what asset class you invest in my opinion. If you're doing the education, every investment asset class has risk associated with it. So you're going to have to figure out your investor identity. And we did a whole episode on investor identity, tgwipodcast.com/investment identity, I believe. We'll put the exact show in the show notes. But yes, knowing what you want to invest in is important because you got to be ready for when that opportunity arises. If the opportunity is staring you right in the face, but you don't know what it looks like, then you're going to miss it. So getting educated is a fantastic way to use that time.
And realistically, it takes time. Once you start to educate yourself, it will take some time to get educated, to establish your investor identity. And then once you do fully dive into the asset class, it takes time to really understand what you'll need to do to make the first investment. So it's a good use of your time to do that while you're waiting about how to take the money and what you can do with it.
Yeah. And I think if you're just starting and all you've learned about is a 401k and you're investing, that is also something to give yourself a pat on the back for. If you're building up the discipline to invest it in an automated fashion, or even if you're actively saying, I want to invest this X number of dollars per paycheck, and that builds up over time, pat yourself on the back, because there aren't a lot of people that are doing that. In fact, I was on Investopedia just doing my research. And this is a 2019 article. They said 20 somethings, ages 20 to 29, the average 401k balance is 10,500. For 30 to 39, it's 38,400. So if you're looking at that, personally, I don't think that's a lot of money to be investing in when the max that you can invest in is 19,000. I think it was 18.5 before. 19,000 was pretty recent. So that would, in theory, be, you could do it in 2 years if you were really diligent about that. So the fact that you're saving and you want to actively take control of your financial future is something to applaud yourself as well.
Yeah, absolutely. I guess one more thing I'll throw in here is to educate yourself on what vehicles you're likely to roll this into also. Educate yourself on self-directed IRAs. How do those work? Educate yourself on solo 401ks and EQRPs. Those two things are very, very similar, especially if you're considering passive investing in commercial deals like syndications. You really want to be looking at the EQRP or the solo 401k because it helps you avoid a special tax that you will get taxed on if you invest in syndications that use commercial debt. It's called the UBIT tax. So look into that and make sure you understand the best place to put your money when you do roll it over so it works for you as hard as possible.
Yeah, so if you have any questions about EQRP, self-directed IRAs, we can talk about it from our personal experiences and what we've gathered from our research. And if we can't answer the specific question for you, we know the right experts to put you in touch with. So don't be afraid to reach out. We'd be more than happy to. And if you've got a 401k story that you'd love to share with us, we would absolutely love to hear it. So shoot us an email, techguyswhoinvest@gmail.com. Thanks, everybody.
That's it for this episode of Tech Guys Who Invest. This is Adam.
This is Kevin. Thank you so much for listening to this week's episode. Be sure to subscribe to the podcast for the latest episode updates and to receive additional investor insights to help you invest wisely and safely. You can join the TGWI Insiders community at tgwipodcast.com/subscribe. Lastly, we would love to connect with you. The best way to reach us is by sending us an email at techguyswhoinvest@gmail.com. Thanks, everybody.